For half a century, the entire world has basically been fighting a war over one thing: oil. But what if the big solution we came up with to win that war has accidentally kicked off the next global crisis? That's what we're digging into today, a wild story of unintended consequences. For as long as most of us can remember, when you heard the words energy crisis, you thought of one thing, right? Oil. Some tension would flare up, usually in the Middle East, and suddenly everyone's holding their breath, watching the gas prices tick up. It's a pattern that has shaped, well, pretty much everything for the last 50 years. Okay, but here's the twist. This huge global push to finally get away from depending on oil, well, it turns out it's leading us right into a brand new resource squeeze. And this new one, it's just as critical, but almost nobody's talking about it. So to really get how we ended up here, we've got to look back at the oil shocks that started it all.
All right, Section 1, Oil, Conflict, and Crisis. You've got to know where we've been to understand where we're headed.
It's a rhythm that just keeps repeating itself, isn't it? Back in '73, you have the big OPEC oil embargo that just shocks the West. Then in the '80s, the Iran-Iraq war turns oil into a weapon. The '90s, the Gulf War messes with supply. And now you look at today, with conflicts reigniting fears over the Strait of Hormuz. And those same old anxieties are right back. Every single time, the lesson is exactly the same. Instability in the Middle East means instability for the world's energy. And for decades, the playbook for dealing with this was always the same. A crisis would hit, and everyone would react. Governments would release their strategic oil reserves to calm prices. There'd be this frantic scramble of diplomacy. It was all about managing the shock. It was a strategy of just coping, not solving. But lately, something's really started to shift. And that brings us to Section 2, the world's new response. Because nations finally realized that just coping wasn't going to cut it anymore. They had to change the entire game. So here's the absolute key. The thinking shifted from supply to demand. Yeah, sure, countries built up bigger reserves and looked for oil in more stable places. But the real game changer, the revolution, was focusing on actually reducing our need for oil. This is where you see these huge long-term strategies pop up, like Germany's famous Energiewende, a massive all-in national project to go renewable. The goal wasn't just to find more oil anymore. It was to need less of it, a total flip. And all of that thinking points to one ultimate solution. The one big strategy that pretty much everyone, governments, industry, you name it, has landed on: electrification, right? Powering everything, our cars, our homes, our factories, with electricity instead of oil. This was supposed to be it, the final move to end the age of oil shocks for good. But there is a catch, a big one. This grand solution, electrification, has a hidden dependency of its own, and it runs on a metal you probably weren't expecting: silver. Which brings us right to the heart of our story in Section 3. We're basically leaving the age of crude oil and entering the age of critical minerals. And right now, silver is stepping into the spotlight. So you see this phrase here, it's different this time. Now, normally when you hear that in finance, you should run for the hills, right? It's usually famous last words. But in this case, it might actually be true. Because the huge surge we're seeing in silver isn't some speculative bubble. No. Something fundamental has changed in what we're actually using silver for. And to get why, you really have to understand silver's unique dual identity. It's kind of got this split personality. On one hand, it's a super critical industrial metal. You literally can't make things like solar panels or EVs without it. But on the other hand, it's a precious metal, a safe haven asset that people flock to when they're nervous about the economy, just like they do with gold. And it's this collision, this perfect storm of massive industrial need and classic investor demand, that's fueling this unprecedented rise. Which takes us to Section 4, the Great Silver Squeeze. Let's really dig into the mechanics here and see what's creating this massive global imbalance between supply and demand. And this chart just lays it out perfectly. Look at the big silver spikes in 1980 and 2011. What was driving them? Speculation. They were financial bubbles, and they popped. But now, look at today. The driver is structural industrial demand. This isn't traders betting on a price. This is about real physical silver getting consumed to build the things that power our future. It's a foundation, not a bubble. That's the key difference. And this chart,
wow, this just drives the point home. I mean, look at that giant slice of the pie for industrial use. We're talking over 60% of all silver demand. This isn't stuff getting locked away in a vault somewhere. It's being used to build things. It's getting consumed by our tech at a mind-blowing rate, totally dwarfing jewelry or even investment. The bottom line is, silver is now an industrial commodity, first and foremost. So what's the result of all that? Well, here it is. For the 5th year in a row, the world is using up more silver than it can possibly produce. We're talking about a projected deficit of 118 million ounces this year alone. That is a huge number. And this isn't just a blip, it's a deep structural problem where demand is just constantly outrunning supply. So the obvious question is, why don't we just mine more silver? Well, the problem is something economists call inelastic supply. And here's the best way to think about it. Most of the world's silver doesn't come from actual silver mines. About 75% of it is just a byproduct of mining for other stuff, like copper, zinc, or lead. So even if the price of silver goes through the roof, the copper miners aren't suddenly going to dig up way more copper just to get a little extra silver. Their main business is copper. The supply just can't ramp up quickly to meet this new demand. So where is all this insane demand coming from? Well, you're looking at it. It's the green energy transition in real time. Solar panels, they're now eating up over 200 million ounces a year. That's almost 20% of the entire world's demand. Electric vehicles, every single EV uses way more silver than a regular gas car. And you have to remember, all of this is on top of the massive existing demand from all our electronics, 5G networks, and now the huge build-out of AI infrastructure. It's just a relentless, non-stop demand engine. Okay, so what does all this mean for the future? Let's pull back for our final section and look at the big picture here. There's this great quote, there are decades where nothing happens, and there are weeks where decades happen. And that just perfectly captures this moment, doesn't it? For so long, the energy world was pretty static, all about oil. And now, in just a few years, we're watching a massive fundamental shift play out right in front of us. And that really brings us to the main point of this whole story. In our big rush to solve that 50-year-old oil problem, we've accidentally created a totally new one. A massive structural shortage of the very metal we need to build our green, electrified future. So it leaves us with a pretty big question to think about. Okay, we've figured out that silver is the critical bottleneck for today's energy transition, but what about tomorrow's? As technology keeps racing forward, what's going to be the next essential, irreplaceable metal that we suddenly can't live without? And more importantly, will we be ready this time?